Hello investors and traders, today we'll speak about the stock market and the US stocks. So let's start with the S&P 500. In my mind, let's today check a global view. So here, if we will check since 2014, it was the first wave, the second, the third, the fourth and the fifth. So here I think impulse finished and now we are in a correctional volume. By the way, it can be ABC move here. So here most probably we are finishing a move. Also, why it can be a nice impulse here if we will check this area. So look, usually the third wave is the largest wave in the impulse. Here it's right, and also if we will check the correctional waves, the second and the fourth, so one of them is sharp and the fourth wave is a flat. And by the way, usual in the fourth wave we have triangles. So if we will check here, we have A, B, C, D and E. So here most probably the fourth wave finished and then it was the fifth wave. By the way, it was the all-time high of S&P 500. It was 4,006 and 800s. So now we in this area, this period, and it's a correctional one. The first, the second, the third. It's my opinion, of course, it's my view. The fourth, and I'm expecting another move down. It will be the fifth wave. So I'm expecting to see S&P 500 below 4,000 in the nearest future. We'll speak now, of course, about the inflation, all the economic data, but from the technical point of view, using the Elliott waves, I think that here we shall see another fragment. So I'm expecting to see the SPY a little bit lower. Let's have a look on the Nasdaq, the IT companies index. So the Nasdaq is up more than 12% since the beginning of the year. Here we see two major support levels. It's 11,000 and 11 and 76. So generally speaking, we saw the quarterly reports of Meta, of Google, of Apple. I think it wasn't so impressive. They weren't so strong in my mind. So I don't know which drivers can lead the market higher. We now will check all the stuff with the inflation, of course, but in my mind now it's the nearest months can be very tough, especially for the giants, for Apple, Google, for Microsoft. So now I'm not buying a growth stock, of course. I'm buying more dividend stocks. I would like to have a dividend cash flows at this year. And let's move to the B2C, the Bitcoin. As I told you at the beginning of the year, my target for the B2C is 30,000. Now we can see that the performance is about 50% since the beginning of the year. So here, for sure, it was an impulse, the first, the second, the third, the fourth and the fifth. And here, let's check it here. Also, I think it was ABC move, this ABC correction, ABC. Also, if we will use the Fibonacci levels, so we can check it here. So look, what I will tell you, usually the wave C, it's 160% from wave A. So here we see it's very clean and very good level. It was about 15-16,000. So yeah, here the lowest, the low. So here, yes, the low was 15,000 bucks. Also, regarding the Fibonacci, after a correction, we may see a bounce a reward about 50% from this decreasement. So another, let's check what can be the level. So generally speaking, yeah, it can be this one. So 50%, it's 41 hundreds, 41 thousands. So what I think that this now, by the way, it's a resistance level 30,000. I can think that we may see towards ending of this year, and in this case there is still a potential to grow about 20%. So why not? Why not? If we already done just in 2 months, even less than 2 months, 50%, so another 20, I don't think so much. The B2C, I continue to hold my portfolio and my target in 30, so it's one of my big bets for this year. Let's move to the oil price. Let's have a look on the Brent price. So here, using the Fibonacci, it was the first, the second, the third, the fourth, and the fifth. No, I think that here is a correctional one, but I'm expecting another move higher than 120. I don't know what will be the reason on what, but from the technical point of view, I see that there is still a high probability to see this asset higher than 100 bucks, at least 100 bucks. And the TLT, also I continue to hold it in my portfolio, the US Treasury bond, ETF 102, and my target 120. So generally I think the most safest asset in the whole market now. And if we'll see a recession in the second half of this year, so of course the TLT will perform very fast and very nice. Let's have a look on this chart, the US economic data for last week. We see that 14 from 16 parameters are released worse than the expected, than the forecast. So it's very bad sign for the economy in general and for the stock market. By the way, the headline CPI expected was 6.2, now it's 6.4. So the inflation in the US is still a lot, more than 6%. All the last year it was about 6%, 7. So it not decreasing, not declining. So I think that the Fed may continue, of course, to interest in rate hiking. So of course it's another huge issue for the stock market. And except this, we can see that adjusted retail sales continue to fall 2.3, and of course the adjusted retail food service more 3%. So it's a lot. Generally all the economic data was much worse than they expected. Another interesting chart, we can see the US credit card balance. Now it's about 1 trillion bucks, and the NY Fed quarterly report shows a record. So the population continued to take new credits, new credit cards, and I think it's another signal that the situation now in the economy, in the stock market, is not so strong, it's very weak. And of course this chart just reflects this opinion. So let's have a look on the Fed expectations for the future meetings. We see the current target rate is 4.75. So no doubt that on the next meeting, by the way, it will be the 22nd of March, it will be increased to 5%, and on the next one, on the 3rd of May, also. No doubt it will be. We may see another hike in the Fed fund rate. It will be about 5.75%, and the next one in the summer it will be another hike. Yeah, it's no matter it will be 5.75 or 5.5. I think that the rate about 5%, about 5.5, it's still a lot, very high interest rates. It's I think it's not easy for the Fed to pay all its liabilities and all the bonds, all the companies, all the corporates bonds. So I think it's it may be a very tough time for the whole economy or for the stock market. So that's why the reason that now I'm buying more dividend stocks. I would like to receive more dividend in my portfolio. Such companies like WBA, we may see that they current dividend yield more than 5%. For example, Philip Morris, it's a tobacco company, its dividend yield also about 5%. For me, it's better now to receive a cash flow, stable cash flow, but because anytime I think that we may see that the market may continue to decrease or even crash. Of course, such companies like Meta, they performed very well since the beginning of the year, more than 40%. But let's have a look. PE 20. Look, the average PE ratio for S&P 500 in a common year, it's 15. Now it's 20. So Meta is very expensive now. Let's have a look on the Amazon. Amazon is now even in showing us losses, so we see the P ratio is a negative. Let's have a look, for example, Tesla, the P ratio now 57, so it's a lot. The P ratio is very expensive. And maybe we'll find here, yeah, let's have a look on Apple. It's 25 and the average is 15, so it's very expensive. By the way, PS ratio of 6, telling us that also the company is very expensive. Look, Apple was cheap here on the maybe the coronavirus, on the ending of there was market crash at the end of 2018. It was 3 but no 6. 6 PS ratio, price per share. It was 2 times more expensive. So I can afford to hold. I can afford to myself to buy and to hold such company in my portfolio now. Google, for example, P ratio. This company has P ratio 21, so also very expensive. And Microsoft 28. Wow, it's really a lot. And PS ratio about 9. I can tell you that if we see a P ratio about 8, about 9, so it's huge number, that the company really is supposed to be a very strong, maybe one of the best in the market. Of course, I like Microsoft. It's a great company. I personally use Office, all the stuff that the company, a lot of its products, but I can't afford to myself to buy it when we see PS about PS ratio about 10. Maybe here, look, it was 6, even 5. Or it was a good time to buy Microsoft, but now, sorry, of course, but it's very cheap. So, and the target, I think the nearest target, by the way, for Microsoft, it can be this one. It can be $200, and in this case, yeah, if it will the stock will decline another 20%, so I will start to buy it. But now in my mind, I think it's still very expensive. So generally speaking, it's my view on the stock market, on the US equities now. So if you like my channel, if you like my analysis, of course, press the like button. Don't forget to subscribe, and see you on the next time. Bye.